Hello everyone, this is where equity markets are at the moment. At the edge. Okay, there's a bit of foliage around, and maybe if markets fall off the edge here, they're going to fall into this thick foliage, right? And maybe we're just going to tumble down the hill. But there's a real risk at the moment that the market is on the verge of a once in a lifetime mega crash. So the mega C is now mega crash risk. The reason for that is, like, all the signs are there. You know, the strongest part of the market has peaked. That was tech, right? The mega caps are struggling, right? Apple broke that support I told you about yesterday. If it can rally back into the previous range in the next 24 hours, then maybe the market will survive. But at the moment, it really does look like it could be the big crash. So what's the risk of that? About 5%. If you have an equity market portfolio, then you probably should be hedging, as I've said long ago. And you need to really think about actively selling down your across-the-board portfolio. Small caps, some of the mainstream stocks, they had an up period over the last week or two, some strength, very good to see. But it's kind of like when you go surfing, you know, the first wave comes, big wave comes through, you know, it's a big set, you catch the next one, then you miss that one. And then you're waiting for the next big wave, but it's a little bit lower, so you wait again, and then it's a little bit lower and a little bit lower. And before you know it, you're back into a period of relative calm. But in this case, for the equity market, that's just going to be a steady decline. Ford was sold off 11.8% after the market closed in New York a few hours ago. And that's another telltale sign that the structure in the market at the moment is not positive. There are flaws in the market. And as I said, this is overlaying the beginning of a property crash in the US. We've already seen a commercial property crash in the US. Some buildings in San Francisco and LA are now selling for 10 cents on the dollar. Specific case, $65 million building in San Fran, sold 3 years ago for $65 million, sold yesterday or last week for $6.5 million. So the commercial market property crash is well underway. And we're seeing, I talked yesterday about existing home sales in the US, and that was down below COVID absolute lows, so really disappointing. And then today in New York, we saw existing home sales today, new home sales yesterday, new home sales and existing home sales in the US now both falling, with consumer confidence below COVID lockdown levels, with small business confidence below COVID lockdown levels. The US economy is in decay, the stock market has started to fall, it's going to get very ugly from here, and it could be one of the biggest crashes of our lifetime. I remember in '87 when the Australian market fell 50% in 3 days. I'm not saying that's going to happen this time, but all of the price action is backing up the manufacturing recession in the US, the manufacturing recession in Europe, and the manufacturing slowdown in China. The 1929 crash happened 1 to 2 years after a manufacturing recession depression. That's what's been the case. The US has seen manufacturing contracting pretty much every month for 2 years now. Take care, protect your portfolio.